Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, March 30th, 2011. Folks, we're going to get into it today. The market's having a solid second day of a rally in a row. Dow Jones Industrial Average up 88 points, NASDAQ up 19, S&P up about 10. Basically 0.75% across the board. The markets just ran into a little bit of a resistance line right up here above 133. First off, for those of you that are part of the Research Center, which, by the way, if you're not part of the Research Center, I encourage you to take a 1-week free trial at InTheMoneyStocks.com. For those of you that are part of the Research Center, what do we know about the 133 level? First off, it's an even number play. So you look for a little bit of a pullback off that even number Pierce. It went to 133.06, therefore it should pull back about 10-15 cents, and that's exactly what it's done here. In addition, this line right here tells us that there's a significant level, and I want to zoom out to show you why that's an important level. If you zoom out here, look at what you get. The pivot high going back to the 8th of March. Get this, guys, the 8th of March. That pivot high is exactly lined up with the Pierce of 133. You put those two together, any two signals by the methodology of in the money stocks, and you get them at a level, you can either go long or short at that level and make money. It's that simple, folks. That's the way it is. The methodology does work. It's proof in the pudding right here. Even number play, master level of a Pierce of 133 based on the 7th of March, I believe it was, pivot high, and look at the pullback. Now, again, you get that pullback, you take the scalp off the table. The market, again, may move up, may move down. It may hold this level. If we go up, you're going to be moving onto the 60-minute chart. The next major level on the 60-minute chart clearly shows your next pivot high resistance at 133.60. 133.60 is next, folks, all right? And again, this line, see this green line right here? That matches up with that pivot high from the 8th. It was actually on the 8th, the pivot high of March on the 8th of March, and that's what we just ran into, and that's what we're stalling at right there at the even number of 133. The next one, as you can clearly see, right here from the 3rd of March, and right there, that's your next spot of resistance. All right, now the other little pivot point today I want to discuss, you have to look at this pinkish trend line right here and this area, folks, all right? The 132.40 level, see how the market opened above it, pulled back into it, and then started to go higher? For those of you that are Research Center members, and I strongly encourage you, if you're not, to take that free trial because it's that good, folks. What you have to do, you have to learn these principles, very simple, but if you learn these principles, it's there for the taking. And the pullback into this pink line was a buying opportunity. Why? Because the gap above this level is what's called a river theory. That is something that we have developed as well at In the Money Stocks to give you an edge over the institutions, over the hedge funds, and over your fellow traders in understanding which direction the market's going to go. The reason why it's a river theory, because if you zoom out, you have a gap fill right here going back to the 10th of, make that the 9th of March. The close on the 9th of March was at 132.40. Today we gapped above 132.40 and pulled back into it. When you gap above a major resistance point, now if we were below that and moving up into that, it would be a gap fill resistance and we short it. Because you gap above it, it's what's called a river theory. It basically dictates that when you gap above a major level, it works as if you took a bridge across the river instead of swimming through the river. When you swim through a river and it's rushing and you're trying to get through it, you're wading through it, you could slip on a rock, you could, drown, you could get ultimately exhausted. You very rarely get to the other side and continue on your way. What you do is usually stall out, you come back, you take a breather, it pulls back, you don't really necessarily want to get all the way through the river. When you gap above that level, it's called a taking the bridge above the river or over the river. And what ends up happening is, it's just imagine walking across a river. All right, no sweat off your back. It's just a little bit of a walk across, and you can continue on your marathon going in that direction. So here we gapped above the river, or the major gap fill resistance right here. That's called a river theory. You pull back to the river for a drink. That's a buying opportunity, and off you go to the upside. Beautiful. In addition, just talking about intraday scalps, folks, this was a short scalp because it was a blue line. First hit of the blue line, you can see you got a little scalp on the pullback. Then you pulled back into this line. That was your long opportunity, and you went all the way to your next level. Remember, you wouldn't short the blue line again because you already hit it. First hits only, folks. This is the first hit of the blue line. You get a pullback. Then you push up above it, pull back down to the pink line. That's your first hit of the pink line. You buy it. You go up, back to the blue line. You're not looking to buy there. Why? Because it's the second hit of the blue line now. You move through it. First hit of this line is a shorting opportunity. And you can see, again, the market's still stalling out there. The methodology works, folks. It's now been proven by us in the money-making ways of in-the-money stocks for years now. Come join, take the free trial. No skin off your back. Take that free trial at in-the-money stocks. Start learning what the pros know. We've taught our members. We'll teach more members, but you got to be a member. All right, in any case, that's your intraday analysis just on what the market's doing. It's a good rally today across the board. I want to take a look at a bunch of other things. First off, what we want to do is look at the dollar. The dollar is moving lower, and this is helping the markets dramatically. Look at yesterday. Opens higher, moves lower. Today, the dollar moves higher, then collapses back down. It seems like whenever the Federal Reserve gets involved in a light volume market, that's exactly what ends up happening. The dollar starts to go lower because they're putting pressure on the dollar by selling dollars, essentially flooding the market with currency as they print money. And ultimately, it means the dollar will be worth less. That's what they want, though, because the amount of money flooding into the markets is what's keeping the markets up. Understand what POMO is, Permanent Open Market Operations. That's basically QE2 divided into individual days. It's called POMO, Permanent Open Market Operations. And what they're doing is they're taking 5 to 6 to 7 to 8 billion a day, buying treasuries from the banks. The banks are taking that money and doing what they will with it, essentially flooding the markets with the money. In light volume environments, that's when it works. All right, we've only done 70 million on the SPY. It is unbelievably light today, but therefore you're getting a rally. Light volume equals rally, means there's very little real buying behind it. It's just more of the POMO. Heavy volume is usually selling, as we saw a couple weeks ago. All right, so that's what we see there. And again, let me clean up the charts just a little bit here and erase. But again, the dollar here cannot hold above. This is a confirmed level. See this blue line? This is the daily chart of the UUP, which is the ETF for the dollar. This little pivot low matched up with this pivot low. You got a bounce, then you broke through. You confirm below. That means this is now major resistance based on confirmation, the confirmation methodology at in-the-money stocks. Now, a weaker dollar is sending commodities. Initially, commodities like gold and silver opened sharply higher. Then they fell as the dollar moved up. Now, as the dollar's collapsed down, they've moved back up. Take a look at the intraday SLV. You can see the collapse here when the dollar started to move up, and then the dollar came right back down, making new lows, and silver has just shot right back up. So again, SLV is higher today on the day. Nice little day on silver, and we are seeing that continue to show some strength. Really, silver has not pivoted to the downside yet. It has not confirmed to the downside yet. I do think it will eventually, but right now it's showing a ton of resilience. All right, gold, same thing. Same chart on gold. Initially opens higher, the dollar spikes, gold sells off sharply, and then the dollar falls and makes new lows of the day, and gold goes right back up. And again, that's really what it is, folks. The more money printed, the more lucrative it is to hold gold because it's the only thing that really can't be printed. You can't go in your laboratory and make gold, at least not right now. Maybe eventually they can do it, who knows. But in any case, dollars, euros, they can be printed, unlimited supply. Not so with gold and silver, all right? Let's take a look at the USO. The USO is basically on the flat line. It opened lower, had a sharp sell-off on inventories, and then ultimately had a skyrocket move back up right to the 200 moving average. Now, let me ask you a question. The 200 moving average, would you short that? Well, obviously, looking in hindsight, you would. And again, this is the United States Oil Fund USO. But you're not just shorting based on one signal. You don't just short because there's a 200 moving average there. You short because you have a second signal. What's your second signal? Can anyone pick this out? Second signal is right here. Double top. Double top from yesterday, you let it pierce right up here. Look at the pullback you get. Right down, where do you cover? 50 moving average right there. It's a beautiful chart, folks. The charts are working like a charm. The day trading intraday stock chat, I mean, the plays in the morning session especially are just ridiculously good. Unbelievably good. All right? And that's the beauty of it, folks. Just use the charts. Let them tell you what to do. That's all you have to do. All right, we had a nice winner in the research center and in the intraday stock chat. I gave this call out on Friday. I said go long SOMX. It's Sumoxin Pharmaceuticals. Pharmaceutical companies have been hot. Gave it out at around 280 on Friday. The stock today ripping higher, making a high of 307. At 305, I said, guys, let's start unloading, and that's what we did. So a nice 10% or so winner, a little less than 10% right there. Easy money. Easy money. Join the research center, take that free trial, and that money would be yours right now if you had taken the free trial. Just that simple play from Friday to Wednesday here. All right, I will be putting out more trades. I've been eyeing many trades. I'm just looking for the perfect opportunity to send one out. And again, it will be posted when I find one in the hot charts and alerts, as again, we'll continue to give you great trades there and a great winning percentage. Financials have been weak for the last week, but they are coming back. JP Morgan is up about 50 cents today. Goldman Sachs is having a good day, up 53 cents, although again, that's not huge percentage terms, but it's still solid. And Bank of America, which has been the weakest of all, is having a day up 15 cents. Apple Computer, folks. Apple Computer continues to be weak. Yesterday, the markets rallied, and just at the end of the day, Apple squeaked to the positive side by a couple pennies. Today, the market's soaring again. Good move, 20 points up on the NASDAQ, and Apple is making a bear flag and negative, down 235. Again, Steve Jobs leaving, competitors on the heels of Apple. You name it, the company's just so big, the growth rate just can't continue, in my opinion. And that's really what people are realizing now. It's becoming more of that Cisco-ish type play, the growth where the company's just so big that, yeah, they're going to continue to grow, but it's going to be much slower growth, in my opinion, no matter what they come out with, especially with competitors on their heels. The competitors now, the products and the competitors, whether it's the iPhone versus the Droid or such, they're very close. It didn't used to be like that when the iPhone came out. The iPhone was by far the most amazing thing out there. Now there's phones out there that do rival the iPhone. And I do think that's going to be a problematic thing for Apple in the future, along with the iPad, many competitors to the iPad that are pretty solid as well. All right, and that's just the way it goes. The bigger a company gets, the more competitors try to fight it and get it, and then eventually one slip up by any sort of company and it's done. Then they fall back to being a mediocre company, still a big company nonetheless. But it does look like that has happened a little bit with Apple here. Chevron and Exxon are having big days today as oil really hovers around the flat line, but these stocks are leaders when POMO occurs, when institutions, buy stocks, especially window dressing into the end of the quarter here. They're going to be looking for stocks that are major. Chevron has been an unbelievable runner. Take a look at your daily chart of Chevron. It's an unbelievable move. Just going back to mid last year. Look at this. Basically down to about $65, $66 here. It's now nearing 110. I mean, this is a run for the ages, folks. Same thing with Exxon, although Exxon is not nearly as good a chart, but still an amazing thing. Chevron's hitting new highs, Exxon's not, but it's still getting a nice pop here. A really amazing move on these charts, on these oil plays. And again, we're just continuing to watch that. Let me just see if there's anything else I want to discuss today. But again, I encourage you to take a free trial. You can take a free trial to the Research Center or the chat room 1 week. Check us out. As simple as that. You don't need anyone to convince you. You can always go and take a look at the calls in the Research Center, on the archives, Hot Charts and Alerts archives, the videos archive, and everything. It's all archived for you guys. I think it's 30-day delay since it's time-sensitive information, but nonetheless, you can get a sense of how good we've been doing. The profits that continue to roll in have been just absolutely amazing. All right, enough said, folks. Have a great afternoon. Come join the free trial of the Research Center. Hope to see you soon. Take care.